The main topic of today's video is the Federal Reserve statement on May 1st and what it means for you and your finances over the next few days, weeks, and months. Let's dive in and go over all the specifics, okay? The Federal Reserve will make its interest rate announcement on Wednesday afternoon at 2 p.m. East Coast time. In the short term, the statement will provide insight into the Federal Reserve's plans regarding interest rates, which have been extremely high over the that has been released for the past few years, will be released at 2 p.m. on Wednesday. About 30 minutes later, Federal Reserve Chairman Jerome Powell will also have a news conference during which he will address some incredibly difficult questions while carefully avoiding giving all of the answers. We can all observe what is happening and the decisions that were made throughout their two-day meeting. Keep in mind that meetings begin on Tuesdays and end on Wednesdays, at which point we receive the crucial news. Now here's the thing. They are really significant and highly impactful announcement as well, since the Federal Reserve has been actively hiking interest rates to combat inflation for the past year and a half, or nearly 2 years. Whether this has been successful depends on who you ask, as the following. We find that inflation has decreased as far as the headline number over the last call, it has been a year and a half. This is because the inflation statistics for the previous month are released in the middle of the month, and since it peaked at 99.1% in June of 2022, we've seen this inflation headline figure declining. Yet it's kind of intriguing since, well, maybe prices aren't rising as quickly as they did a few years ago, but the current state of pricing are still quite high at the moment, despite the fact that prices have not increased due to rapidly rising inflation. As a result, we continue to see that we still lack money, and we continue to pay out the same amount. Now, here's the point. Since no one has any money at the moment, many people are floating sums on credit cards with extremely high interest rates that have increased over the past few years due to interest rate hikes by the Federal Reserve. All right, so even while we might not be going to the shop and spending an extra $1, $2, $150, or whatever it is for everything in our cart, we are still having to pay the same amount out of pocket for interest on credit card amounts that we're floating. In the end, we're effectively spending the same amount of money, if not more, than we have over the past few years because, well, maybe it's not on the rising costs of products and services and other such things. But the reason for this is because no one has any money, which means that at the end of the day, we're still paying out of pocket the same amount as we have been for the past few years, and quite possibly even more, as currently though, I apologize for going off course there. As you can see, the issue is critical since it revolves around the Federal Reserve and its statements. Here's the thing, every 6 weeks, they convene, and they having this announcement or they're holding this small meeting. They hold this 2-day FOMC meeting once every 6 weeks. The next one is scheduled for June 12th. So the question is, what is it about? It's 6 weeks out, clearly, so it's in the middle of next month. But when we make this next announcement, it will also be crucial because, as of right now, interest rates have been kept extremely high, and there has been a lot of talk about how they might continue to pause, but hike rates a little bit more in light of the inflation figures, or perhaps they will start cutting rates at some point. Nobody really knows. For this reason, this announcement is quite significant because it will have a significant impact on a number of various issues. Because borrowing rates have increased so much over the past few years, the housing market has also totally dried up. Because borrowing rates are so high, many people can no longer truly afford the houses that they could a few years ago. A lot of variables, and once more, the interest rate policy translates literally into everything. So if you're borrowing any money right now, as I mentioned, you're floating a credit card balance. This makes those payments much costlier as well. You are applying for a new auto loan, a mortgage. This is all extremely important, so we'll have to keep an eye on what happens here. But a couple of things. First, student loans are practically meaningless. They are all dependent on what the Federal Reserve is doing to some extent. Of items I want to quickly highlight for you, it seems like there is a lot of buzz going around that they are going to start decreasing rates and have up to 6 cuts this year. I'm not sure about that though. I sincerely doubt that there will be 6 interest rate reductions this year, unless something incredibly unusual occurs in the second half of the year. Even in that case, there won't be 6 meetings. If they start aggressively lowering interest rates, does that signal that everything is well and we can move forward? That's not what I would advise. Now, here's the thing. If they start aggressively lowering interest rates, I would say that's a bit of a danger sign. But let's take a broader view. Why would they lower interest rates when, as you may recall, they raised them to combat inflation? The economy has been decreasing because individuals like you and my small, medium, and large enterprises, basically, everyone is reducing their spending and borrowing because borrowing is extremely expensive when interest rates are, for example, 6, 6, A2, 7, 7.5, 8, and more percent now than they were a year ago. The cost of borrowing money has increased dramatically since a few years ago, when interest rates were lower, perhaps 2, 2, and 1, 2, 3, and A2 may be on the high side. If that's the case, then since we're borrowing far less, spending less, and stimulating the economy less, all of this is having a significant negative impact on the economy, which is contracting as a result. Therefore, consider everything. Thus, if interest rates are lowered, it is essentially their way of signaling that they are becoming dissatisfied with how fast the economy is contracting and how soft it is becoming, and that they will begin to perceive lowering interest rates to stimulate borrowing, spending, and other such activities. When interest rates gradually decline, this facilitates people's ability to borrow money, which in turn facilitates our ability to possibly, the notion that, hey, I need to borrow some money to stimulate my business, or whatever it is that people are thinking at the time, seems sense. So you start doing this, and voila, the economy is stimulated once more without going into overdrive and increasing inflation. Makes sense. So even if a lot of people are saying that interest rate cuts would be fantastic for the economy at the moment, it really depends on how you frame it. For example, if the economy starts to contract faster than it is currently, now depending on the real depth of the economic contraction, they will probably cut rates aggressively at some time. We'll have to wait and see, but these are all the kinds of issues that we're considering. And keep in mind that a lot of this will also produce a lot of volatility in the markets as well. For that reason, if you're considering actively following any of these markets, the stock market, the cryptocurrency market, the bond market, etc., be ready. That's what they call it on Fed Day, usually on Wednesdays, when the FOMC releases its pronouncements. There is typically a lot of volatility. This volatility may not be as great when the interest rate is revealed, but rather when the chairman of, according to Federal Reserve Jerome Powell's statements, which are normally heavily weighted in terms of what the Federal Reserve would likely do with interest rates, that is when volatility typically begins to occur and whipsign the market all over. Many people already have a fairly good notion of what they're probably going to do, so the market really doesn't react all that much to that. However, it's usually the chairman's response that makes things a little problematic. All right, so anyway, this is what I want to rapidly draw your attention to once more. I realize there is still some time, but we need to be ready for this. And remember that everything is always fueled by the economy. We constantly ask ourselves, are they going to do anything for us? Since everything depends on the state of the economy. If it declines, we must of course raise it again, so it's sort of like an inverse effect. This is what I currently have for you, and I hope it makes some sense to you. However, please know that I'm always available to you, no matter what. If you haven't already, please subscribe below and share the video. Share this video with your friends on social media. Then return to the channel to view any of the thousands of other videos, including ones that have appeared on your screen during this video or that you are currently viewing. I'll meet up with you later in the next video, but until then, enjoy your day and check out the ones below in the description or at the top of the comment section.